I'm hearing some unbelievable stories. I'm assuming you are as well, about this crazy housing market and how houses are being bid up and sold well above asking price. Guys, is this it? Are we in the next housing bubble? Got some perspective coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. If you haven't seen this article from CNN Business, check it out. I mean, this is one example, okay, but I know you've heard stories similar to this from others. But this is a house outside of the Washington, D.C. area, 1,800 square feet, a modest house, but obviously in a very dense and populous area. And they listed the house earlier this year for $275,000. And just a few days later, they received over 80 offers, over 80. 76 of them were all cash, and they ended up selling this house for $440,000. It's unbelievable. Now, I'm going to say this is sort of an anomaly that it's that extreme, but this idea or these occurrences are happening more and more. I've told you before about some folks are having a hard time actually getting approved for the loan because they've had to buy a house well above ask. And when they go to apply for the mortgage company is saying the house doesn't appraise for that. And so we can't give you a loan for that much for this high number. So you're hearing stories about this as well. I'm hearing it where houses are just being bid and bid and bid well above ask. They're selling quickly for all cash. Is this the next housing bubble? Now, the last housing bubble I can remember vividly like it was yesterday. It was very scary. In my opinion, the housing bubble and the great financial crisis, that was scarier than the tech bubble. And it's simply because the coronavirus-related recession was so abrupt and then had such a quick rebound. Again, the great financial crisis seemed scarier, seemed worse. It lasted longer. And I mean, get this, it took almost $1 trillion of money printing and stimulus to have us rebound from that. Yeah, we're north of $6 trillion right now for this one, but that's a topic for a different video. The question is, are we in the next housing bubble? Should you watch out? Well, the way I look at it, if you look at the last housing bubble, the Great Recession, there were 4 elements. Now, for those of you that are really detailed, there's a lot more than 4, but I could distill it down to these 4 elements that existed to create or exacerbate the housing crisis, the housing bubble last time. First, you had this overconfidence from consumers that houses were just going to continue to go up in value. Houses only go up in value. That's what everyone thought. And there was this constant assumption that, well, a house, I can buy it here, and in 3 months or a year, it'll be worth this. A year later, it'll be worth this, and this, and this, and just houses only go up in value. Is that overconfidence there today? I think so. And it might be for good reason, but I think the expectation is, of course, the housing market will continue going higher. And why would I say that overconfidence is there? Why else can you explain overbidding on this overbidding frenzy that we're seeing on houses? I mean, the only assumption is, all right, well, the house will keep going up in value, so I'm okay paying a little bit higher than what they're asking today because it's just going to continue going up. Okay, so overconfidence that the housing market, that houses were going to continue going up in value. I'm saying that was one ingredient. That was the first ingredient last time. I'm seeing that ingredient exist here today. Second, you then had over leverage. Because people just continued to assume, and even banks, I'll get to that in a second, but people just continue to assume, well, the house will continue to go up in value. I'll just continue borrowing more and more and more. and you started seeing people using the equity in their home as an ATM machine. Basically, they were using the equity in their home. This all of a sudden, I didn't do anything and my house is worth more, meaning I have more equity. They were using that equity to finance other lifestyle purchases, and it was very common back in those days, 2004, 2005, 2006, to look at someone's financial situation, look at their mortgage and say, well, interest rates are lower now, you should refinance. And you've got this other debt out there that's at higher interest rates, you should clean that up too. And people were doing cash out refinances, paying off other debt, and so on. So are people overextending themselves? Are people taking on too much leverage? Well, take a look at these charts. It actually doesn't suggest that, not yet at least. When you look at the debt service as a percentage of household income, it's extremely low, extremely low. And when you look at the amount of overall equity that people have in their houses, it is more than double. It is more than double what it was back before the last crisis. If you look at this data here from Ritholtz Wealth Management, and they're saying that back in 2007, there was about $10 trillion of overall housing equity and about $9 trillion of mortgage debt. Today, guys, we're at $21 trillion of equity, housing equity, and $10 trillion of mortgage debt. So, gosh, we have a lot more equity than we have debt. So I don't think this over leverage exists yet today. The consumer seems very healthy, and that's my recommendation to you. Don't get overextended. Don't get over leveraged, okay? The third thing that existed that helped really exacerbate the housing bubble last time was very aggressive lending practices by banks and other lenders. Very aggressive, unscrupulous. And there were even lawsuits that, I mean, how could someone without a job get 3 mortgages for these houses that, you know, obviously they couldn't afford and they had no down payment, right? You heard tons of those stories, even articulated really well and vividly in The Big Short book and video. And so we heard about these crazy things where people were getting mortgages when really they had less than ideal credit worthiness, right? And so those aggressive tactics by banks and lenders, that exacerbated, that turned this housing bubble into, you know, the crisis that it turned out to be. And so is that present today? No, at least not yet. Take a look at this chart as well. Lots of people refinancing, lots of people buying houses, but look at the average or the credit score, the extrapolation of credit scores of who's getting actual mortgages. I mean, the folks that are getting mortgages have very, very strong credit scores. I don't think this is an indication that we've got aggressive lending practices and proprietary lending practices like we had back in 05, 06, 07 era. We'll see if it gets there, but it doesn't look like it's there yet. And then the fourth ingredient to the housing bubble last time was then this overconfidence by consumers. That was the first ingredient. Houses will just keep going up. Therefore, I'll just borrow more and more money. And lenders were very willing to, you know, lend you that money, give you that money. And then the securities industry basically securitized those mortgages. And they took really high risk loans, packaged them with low risk loans, and said the entire basket is low risk and sold them off to investors. Is that happening? Yeah, that is. And that's not new to right now. That never stopped, guys. Maybe there was a little bit of a hiatus in 2009, 2010 as some of these lawsuits were being handed out. But guys, that never stopped. And in fact, you know, in moderation, this securitization of not just mortgage-backed securities and other things, but I mean, that overall process by Wall Street, by investment banks can be healthy for the smooth functioning of the financial markets. It's just too much of it, or the hiding bad loans in a package of good loans. That can be disastrous. Is it still happening? Yeah, but it's not. It didn't just start in late 2020 or 2021. It's been there throughout. So, are we in the next housing bubble? Well, if those 4 ingredients helped create the last housing bubble, and right now we only have 2 out of the 4, my opinion is we're not in a housing bubble, at least not yet. We very well could be on our way right? If this overconfidence leads to over leverage, leads to banks saying, of course, houses only go up, so I'm willing to give loans to anyone. I mean, that seems like that naturally could occur, but it hasn't happened just yet. Therefore, are we in a housing bubble? I'm concerned at how quickly houses have gone up in value. I can't necessarily say it's a bubble just yet. So what is happening? Before I get to what you should be doing about it, what is happening? Why are houses selling so quickly and being overbid and bid up and bid up? What's happening? Well, three things. Number one, you've got extremely cheap money. Extremely cheap money. And yes, mortgage rates are up since the beginning of the year, but they're still near historic lows. It's unbelievable. The 30-year mortgages at the time I'm recording this are still slightly above 3%, which is crazy. That is half of what my first mortgage was back in 2006. It was. I had a 6.25% interest rate. Today you can still see a 30-year rate around 3%. You can see a 15-year rate around 2.5%. That is cheap money. That is cheap money, especially in context to potential inflation, which I'll get to. So I think cheap money is helping to say, well, yeah, I can overbid here because my monthly payment's not going to change that much because interest rates are so low. So that's one. Two, you've got inventory of houses, existing houses on the market, guys, at record lows. At record lows. Take a look at this chart. We've got, from going back to 1990, I believe is how far the chart goes and the data goes back. Right now, we are seeing the fewest number of houses on the market. Now, you could say, well, that could be a couple different reasons. You could just say, well, houses are selling so quickly, we're not building up an inventory. Yeah, maybe. I think a more likely scenario is people, number one, have been so concerned about going out and rubbing elbows or rubbing shoulders with strangers because we might pass germs. I mean, how excited is someone going to be about inviting a stranger into their house so that they could sell their house? I think people are not listing or have not listed their house simply because they don't want a bunch of strangers tracking through it. That's my sense. And now you've got prices that have bid so much, you've got people reluctant to sell their house because they're going to have to buy something and they don't want to buy at these extremely high prices. So we've got record low houses on the market. When you've got cheap money and you've got record low inventory, that's supply and demand. Prices are going to be bid up. So that's the second reason. And third, which my guess is you'll find the most interesting, the third reason why I think the housing prices are just going up like crazy is right now we've got likely inflation, okay? And yet the Fed has said we're going to keep interest rates low. So if you're looking and saying, well, we've printed $1 gazillion and interest rates are going to be low, you've got to look and say, well, where can I actually keep up with or even beat inflation with my dollars? And one place is the stock market. We've talked about that. But another place is real estate. I mean, part of inflation is our houses getting more expensive. And I know they remove housing increases, from a few of the inflation measures. But in real terms, housing and buying houses is a way to at least match inflation or beat inflation. And so I think the Fed has painted people into a corner and said, listen, your options to beat inflation or keep up with inflation are very, very slim to none. So for those of you that have good income or maybe have been on the benefiting side of all of the money printing and so on from the Fed, and you've got excess resources right now, you might be more willing, more interested in buying a house, potentially paying above ask so that you can hopefully have your dollars meet or exceed inflation that's likely coming. So those are the three reasons I think we're seeing inflation right now. Could those change tomorrow and all of a sudden prices drop down? I think so. It's very possible. Interest rates are on the rise. I think the Fed is going to keep their interest rates low as possible. And as they continue to print money, I think that inflation risk, that will probably stay there. But things could change tomorrow. And therefore, I wouldn't necessarily trust permanently that the housing market is going to go up and to the right from here on out. So what should you be doing about it? Number one, don't overextend yourself. Don't overextend, okay? So be very, very careful about how much debt you allow into your life and what you do with your home equity, with the equity that you're growing. Second, if you are looking to buy a house, be very, very aware where you're going to get your down payment from. Because the housing market is moving so quickly here, I'm seeing more and more people buying their house, buying their next house before they sell this house. If they sell their existing house, if that's you, where are you going to get your down payment from? You've got to work with your certified financial planner and map that out as well. And then third, finally, don't let this housing frenzy overshadow other financial goals of yours. Don't say, well, houses are now more expensive, or look at how quickly housing prices can rise. I'm going to shortcut other investments or taking other steps in my financial life and have more of those dollars directed to paying off my mortgage or buying this house. Don't get your overall financial life out of balance as you're trying to achieve your level of financial success. So work with your certified financial planner on each of those. If you don't have a CFP, contact one on my team. You can find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.